Shukr. Good evening, everyone, and thanks for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host the call. From the management, we have today Mr. Bimben Jha, Managing Director, Mr. Ram Kumar Ramaswamy, Chief Financial Officer, and Mr. Vishal Chandak, Head IR. Without much ado, I would invite Vishal to take this ahead. Over to you, Vishal.
Thank you, Amit. Good evening, everyone, and thank you very much for joining us on the Q1 FY2024 earnings call briefing for Jindal Steel and Power. So we'll not take much of our time, and I'll request our CFO, Mr. Ramaswamy, to start the presentation with a quick overview, and then we'll follow with the Q&A. Over to you, sir.
Thank you, Vishal. So prior to getting into the operational and financial performance, I would like to start with a few recent highlights that we've just announced. We've announced the commissioning of the pellet plant in Angul. We've announced the receipt of mining leases for Garepalma 4x6 and Utkal C. And we've also received the Great Places to Work certification. So all of these would be part of our current quarter's announcements, and we're very, very happy to share these with all of the investors. We can share further details about this during the Q&A. Let me now give you an overview of the operational and financial performance. Our sales volume during the quarter was 1.84 million tons, which is 9% lower QOQ, primarily driven by weaker demand owing to seasonality factors. The share of exports during the quarter was 10%, broadly in line with the last quarter. The production for the quarter was 2.04 million tons, which is a 1% growth QOQ. Both the plants at Angul and Raigarh produced in line with the last quarter. Let me now talk about the realizations. Our domestic sales realizations remained soft during the quarter. However, with an improved export realization and mix, our overall realizations increased by 2% quarter on quarter. We are continuing to experience softness in realizations in the range of around 5%, and we have to see how it plays out during the quarter. Our SMS costs increased by 2%, primarily driven by higher coking coal prices. However, this was offset by higher captive iron ore volumes from our mines, and the overall costs were lower by around 2%. As per practice, we do not provide any forward-looking guidance on numbers for the subsequent quarters. Our adjusted consolidated EBITDA for the quarter is rupees 2,704 crores. This is primarily driven by lower costs, offset by lower volumes. Our overseas EBITDA for the quarter was rupees 39 crores. On a consolidated basis, our PAT has improved QOQ from rupees 466 crores to rupees 1,692 crores, primarily driven by EBITDA improvement in our India operations. You would, of course, note that there were one-off items in the last quarter. I would like to give an overview on the cash flows and debt. We had a opening cash balance of around 4,700 crores. During the quarter, we had operational cash flows of approximately around 2,250 crores. This is after a working capital buildup of around 400 crores during the quarter. During the quarter, we had a total capex of around 1,900 crores, primarily in Angul. From a financing perspective, we repaid rupees 2,300 crores of our loans, and we also took fresh loans as part of a refinancing program to the extent of around 1,074 crores. Our closing cash balance is at a very healthy level of around 3,800 crores. Our consolidated gross debt is rupees 11,484 crores, and our consolidated net debt is rupees 6,812 crores, with a net debt to EBITDA of 0.75. You would also have noted that the pledge NDU on promoter holding, which was part of the debt covenants, they have now been released as part of our overall refinancing program. With this, I would like to hand over to Vishal for Q&A.
So, operator,
thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Operator, just a request. We have to limit the call till 6 p.m. today, as the management has some other engagements.
Sure. So requesting all the members to limit your question to one per participant. The first question comes from Indrajit from CLSA. Please go ahead.
Hi, thank you for the opportunity and congrats on a good set of numbers. My question is on the capacity expansion schedule that you have given in figure 14. So there is again a couple of quarters, actually more than that, delays in most of the capacities, 2 to 3 quarters delay further. And moreover, we are seeing a change in configuration. I don't see the electric arc furnace anymore, and a new blast BOF has come up, BOF 3. So the question is twofold. One, what is driving the delay and what is the confidence that the new timelines will be adhered to? And second, if there is any change in configuration versus what we had earlier expected.
Yes, sorry, just one moment. So instead of EAF, you're seeing the BOF 3 over there. That is what you're looking at, right?
That is one question, and the delays. These are the two questions.
So the delays, there were some delays in the environmental clearance and other things. So there is a bit of a delay that took place as a result of that. We are trying to pull back as far as possible, but given the rains and all that, we are not able to make that much of progress as we would have anticipated. So these are anyway very aggressive timelines, and I think we have given a slightly more relaxed timelines over there, although we are still working to a tighter timeline internally.
Sure, this is helpful. And on the BOF 3?
Yeah, so there is this BOF, we are anyway planning along with the blast furnace 2, that expansion. And we are still looking at this DRI 2 that is there. So it is, one of the BOFs will come faster and the other one is on a slower time frame. So if there is any change on that one, we will let you know.
And EAF also we are pursuing some...
So it is an option. It's an option between BOF 3 and EAF. Because of DRI 2, that option exists.
All right, but that doesn't change any of our CAPEX guidance, right?
No, the CAPEX guidance doesn't change. It is just a question of, some thought process that is still there on BOF versus EAF.
Sure. Thank you. That's all from my side.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good evening. Just wanted to understand the realization performance better. So clearly the realization has been a bit out of line with how market prices have behaved. Could you just quantify how much of benefit was there from this higher priced exports as you mentioned in your opening comments?
Yeah, I can talk about it. So as I said, overall the India realizations continue to remain soft. Yes. So I think that is something that we are also seeing. Given the overall mix and the improved exports, so in exports we are roughly seeing around 8 to 10% delta over our domestic prices. And I think taken in totality, we saw a slightly improved realization. But the domestic India realization is weak.
So let me give you the numbers to put it in context. If we consider, quarter 1 of last year to quarter 4 of last year, so it had just the India realizations had declined by 11% from 68,390 to 60,600. From that level, it has been relatively stable, but marginally down by about 1%, and it is now at 59,961. So that was the kind of number which is there.
And even in this current quarter, we have seen further decline in rebar prices. So, is it fair to assume that the drop in realization would be sharper than the realization? The drop in your realization would be sharper than the fall in rebar, because that higher priced export contract benefit will not be available in the second quarter?
As I had indicated, we are seeing softness in our realizations, approximately around 5% on a quarter-on-quarter basis. But again, this is too early to kind of comment on how it will play out. We are constantly looking at how the mix can be improved, and let's see how it plays out during the quarter.
And just also the coal blocks, could you just help us understand how will the ramp-up be on that 7.4 MT of volume?
So there are still many a slip between the cup and the lips, because we have got the mining registered, but that is not the only legal hurdle. There are several other permissions, and every day is a struggle to get to those permissions. But we do hope that within this quarter we will be able to start our mines.
And any planned ramp-up schedule?
As soon as we hit the coal, we'll be ramping it up based on our ability to get into the mine first.
Okay, sure. Thanks. I'll come back and thank you.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Congratulations on a great set of numbers. Raw material costs have declined on a quarter-on-quarter basis. So, can you give some highlight of how much iron ore and coking coal and thermal coal was down? In your consumption cost?
I don't think we will be able to share the exact details at this point of time. But as I said, our SMS costs increased by approximately 2%, primarily driven by higher coking coal prices. However, during this quarter, we had a higher captive iron ore from our Tensa mine, and therefore the overall costs were lower by around 2%. Last quarter, we had kind of stopped the mining because we had accelerated the mining from our captive mines during the last financial year, and therefore last quarter it was a much lower volume. So this time we had a much higher volume. So at an overall level, our costs were lower by around 2%.
And the thermal coal would have also declined, right? It is on a declining trend.
That is right. The thermal coal prices, of course, the auction prices are all reflecting a decline, and we will start seeing the benefits in the Q2.
Okay. And sir, as you gave guidance of NSR, which could be down 4-5% for next quarter, how will the costs are trending in this quarter?
So let me clarify. That was not a guidance. I've given you an approximate view of how things stand as of now. We do not give a forward-looking guidance on either NSR or costs.
Sure. So if you can guide on how the costs are also trending.
So as I said, we do not provide forward-looking guidance.
Okay. Thank you. Yeah.
Thank you. A reminder to all participants, please limit your questions to one per participant. The next question is from the line of Kirtan Mehta from Bob Capital Markets. Please go ahead.
Thank you, sir, for giving this opportunity. The question is, basically, we were planning to undertake the CapEx review and inform the market about the sort of the revision in the CapEx plan. Has that been completed? And is this changes a part of the same, or we are still expecting the CapEx plan to also evolve at a later date? And also, in the changes, apart from the changes that you have mentioned, we are also not seeing the thin slab TACR component present. So is that also exist as an option further?
I think that is a typo. So let's say that the rest of our configuration remains the same.
Fine. And on the review of the CapEx, has it been over or it's still ongoing?
Revision, there is no revision in capex as such to announce, but there are obviously constant evaluation of the opportunities around us that keeps happening. So till the time that we have got any bankable feasibility report or anything else, we can't make any announcements.
Last time, what I understand was we had made an announcement about the review being undertaken, and plan was basically either to come with to the market before as soon as it completes. So the exercise is still on. That is what you are confirming at this point of time.
Yes,
we had said that we will share the capital allocation framework, but given several ideas that are being considered, we have still not concluded that, and we will share that the moment it is available for sharing.
Fine. So anything that you can share on the ideas under consideration at this stage, or that's too early?
I'll tell you the reason for rethink and everything else is that the world is moving towards more and more green steel, and we are looking at options.
Fine, sir. Thank you. I'll get back.
Thank you. Reminder, please limit your questions to one per participant in the interest of time. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Hi, good evening, sir, and thank you for the opportunity. My first question is just continuing on the previous question on this capital allocation framework. Our annual report also mentions about our plans for cold rolling mill, etc., along with hot strip mill. So if you could just detail, what sort of downstream opportunities are we evaluating, and what could be the mix of finished steel and potential capacity over the next 2-3 years?
So we are evaluating these downstream options, which include cold rolling, galvanizing, color coating, etc. So these are natural. Once you put up a 5.5 million ton hot strip mill, which is currently our focus to get it off ground, then the next obvious things are the downstream facilities. So that's what we are working on.
Thank you. The next question is from the line of Vikas Singh. Please go ahead. From Phillip Capital.
Good evening, sir. Thank you for the opportunity. Sir, I just wanted to understand, while we have pushed back our capex by a quarter or two, our total spending on an yearly basis remained constant. So have we added something additional, or this is just some typo?
No, we are actually, we should be marginally less, if at all. But our numbers are more or less similar.
Despite the capex being, some of the larger capex being pushed back by half a year.
No, see, the only thing is that it is the commissioning time. So we have taken a bit of a cushion over there to give an indication. As I said that there have been delays that were there in obtaining environmental clearance and all the statutory clearances. So to that extent, there has been a quarter push in most cases.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So with the commissioning of the pellet plant, what sort of, will we see more external sales, or we'll stop procuring from outside? And what could be the potential cost benefit over there?
We are not. We have not been procuring any pellets from outside anyway. But yes, we are wanting to ramp up this capacity, and thereafter, as the new blast furnace comes in, then we will start consuming all the pellets ourselves.
Okay, so right now, till that blast furnace comes, these are available for external sales.
Yeah, there will be some amount that may be available, depending upon the economics, because as you are aware that even though we had the capacity between iron ore prices and pellet prices. If there is a positive margin, only then you sell.
Sure, sir. And also on the slurry pipeline, would it, would it not have made sense to commission that along with the pellet plant?
Oh yeah, nobody wants it more desperately than us. But you have to deal with the ground reality of the country.
Sure, sir. Yeah. Okay, thank you.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yes, sir. Thanks for taking my question. Sir, sorry to harp on the raw material thing again, but the numbers are not adding up to what you're saying. If you add the raw material position on a QOQ basis, it is down nearly 10% and not 2%. And this is excluding the change in stock, just the raw materials plus the purchase of stock in trade on a QOQ basis. So that is a very, very sharp reduction, which is does not matching exactly with the numbers that you are saying. Now, is this a sustainable number, or how should we look at this number? You look at the QOQ position, it is down more than 10% actually.
No, maybe if very specific details or numbers, I would request Vishal to clarify to you separately. But as I indicated to you, I think these are the costs that we are seeing. Our SMS costs have increased by 2%, and because of higher captive iron ore prices, the overall costs are lower by 2%. But any more specific details, Vishal will be able to share that with you subsequently.
Right. And for this quarter, the cost is going to go up a little bit, is it?
No, as I said, we don't provide forward-looking guidances. But given that the same question is being asked several times, I can only say that coking coal prices have come down. So we expect to see some of the benefit during the current quarter.
Coking coal and
iron ore prices have also come down.
Thank you. The next question is from the line of Pavas Petia from Aditya Birla Mutual Fund. Please go ahead.
Sir, comparing with your last quarter presentation, have we changed the plans for finished steel capacity? There's no thin slab caster in this presentation.
I already mentioned about a typo. There is no change in the plan.
Okay. But timeline-wise, it will be still in FY25 itself.
Yeah.
We will get back. As we said, there are several of these currently on the drawing board, and we are looking at what would be the best configuration for us. If there are any changes to this, we will keep you updated on that.
Sure. Thanks.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you, sir. I think my line got dropped. So one is we've discontinued giving the international business EBITDA of various mining businesses. Is it possible to get that?
Sorry, could you repeat that question, Sumangal?
Sir, the EBITDA of different international business mining businesses, which is in South Africa, Australia, Mozambique. The press release does not mention it. In the past, we've always shared those details in the press release.
Yeah, I mean, given the low materiality to the overall numbers, we thought it did not make sense. But if it is helpful, Vishal will be able to share that with you separately, Sumangal.
Got that. So, and just one last thing on this cost, is it possible to share what would be our, say, coking coal and thermal coal cost, and how is it as on, say, today, not asking forward guidance, but how is 1Q versus what's the current trend in the market?
So you already must be watching Platts. It is around 350 level, at least 340. Sorry, 247 to 250 level. I'm sorry. So that is a current level right now.
But sir, what would be our cost in 1Q? I mean, in our numbers.
See, we don't disclose those specific numbers, Sumangal. So you will have to bear with us on this. We don't disclose those specific numbers, and we don't give forward guidance. So my request to the analyst is please not to ask for that, because we just want to make sure that this is consistently being followed. Yeah.
Got that. I understand. But okay, just one last thing on thermal coal. Is it possible to share what is our mix in terms of how much are we using linkage versus e-auction or even imports?
We hardly use any imports, but we are typically more domestic.
And linkage and e-auction breakup, sir?
I don't think those details are available at this point of time right now, and I don't think we have also shared this in the past. So we would be unable to share that.
Okay, got it. Thank you, and all the best, sir.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Just a clarification question before I ask the call on the PACR. If there's a typo, the finished steel capacity after the expansion still stays at 15 million tons per day.
Yeah, the finished steel capacity we are still expecting around the similar level.
Okay. On the just one question on the coal mines. What is is there a separate capex figure for that? In addition to the 44,000 crore capex, would there be additional outlay for mine development capex? And given the negative surprise in the Russell Valley mine, the mining ash and quality did not meet the earlier expectation. Given what you've seen with Gas Pharma 46 and Utkal mines, are you confident that the grade, whatever it is, G10, G12 or the ash, is meeting the expectations so far you have from the mine, based on whatever you've seen so far?
So I have not understood the question or the purpose of it.
The Russell Valley mine, initially when the mining was being developed, there was expectation on certain costs, and over time there was some negative surprise on the ash content and the quality, which is one of the reasons I'm guessing there's a write down also. When you're looking at the new mining blocks, they're going to commission soon. The quality so far, based on what you're saying, are you confident that the quality G10, G12 and the ash content would remain meet your expectations?
You're talking about our Australian resources or Indian resources?
Linking the Australia one had negative surprise in terms of quality. The Indian coal blocks that you're seeing, obviously management has had time to evaluate these blocks in the last 1 year. Is there confidence that there would be no negative surprise on these blocks?
I think maybe let me first answer and then MD sir can build on it. See, I think firstly it is not correct to compare the Australia experience with the India experience. Australia had several other issues, including our ability to invest and get the right return. So they are not comparable. Of course, we are confident about the quality of these mines. That is the reason why we've bid and we've got these mines on auction. So I think we are comparable. We are quite confident that these mines will serve the purpose for which they have been acquired. It is not correct to compare the Australia experience with the local experience.
I'll also tell you, that is why I was not able to understand what is your question and what are you getting at. As far as Australia is concerned, Australia has had a lot of different kind of legal environment and issues around the restrictions on mining, etc. It's a completely different ballgame compared to India. India is our home territory, familiar territory. The mine is next door. It is a fully explored mine. There are no surprises. We know exactly what is where the coal is lying. We know exactly where we will enter. Our shovels are ready. Just we need the permission. There is nothing that we have to worry about in India.
Yes, thank you. Just on the capex, how much would be the mining capex for this?
We will share that with you separately. We have not kept that separately over here.
No. Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Amit Dixit for closing comments.
I thank everyone for attending the call, and again thanks to the management for giving us the opportunity to host the call. I would pass it over to Vishal if you would like to have any closing comments.
So I would request our MD sir to have a closing remarks for the quarter.
Yes. So first of all, I am once again happy to say that we have not only been able to commission the pellet plant and also have obtained almost the heavy lifting has been done in case of coal mines. Rest of the plants are on track. We have taken a bit of a cushion there. That's why we have given a bit of a guidance where the commissioning date, given our past experience, we have taken a bit of a liberty over there to say that there is maybe a quarter delay in most cases. But by and large, we are on track as we had planned. There is of course some amount of rethinking and our ability to do something new within the constraints of what we had put as our plans, so that our carbon footprint goes down. We are able to give a better, better product mix to the external markets apart from internal markets. You are aware that CBAM, etc. are coming, and therefore we are being more cautious about some of the things that we are doing. Some of the re-evaluation is taking place only from that point of view. So on TSCR, we will come back to you because we have sent you all these numbers, and there may be some errors somewhere, which we will rectify and send it to you. So that's all that we have from our side. We have also been certified as Great Place to Work, and we are actually quite confident on our team to deliver on all the results as the opportunities are there all around us.
Thank you. On behalf of